After 2 years of consistently raising interest rates, the Federal Reserve has announced a pause. This is a major change because the last 10 consecutive meetings, the Federal Reserve had raised interest rates by at least 25 basis points. This has been going on since the end of 2021. You can see on the chart right here. But now, in this 11th meeting, they announced a change, which was pretty significant, and I want to talk about how it's going to impact you as an investor, whether that's for real estate, stock market, crypto, or just the economy in general, because this will have impacts on banks as well. So what we have seen is that the Federal Reserve has officially announced this pause in what would have been the 11th consecutive interest rate increase. They said in this meeting that they have raised their policy interest rate by 5 percentage points over the last 2 years, and they've continued to reduce their security holdings at a brisk pace. They said we've covered a lot of ground, and the full effects of tightening have yet to be felt. So as a result of this, they want to wait and see in this June 2023 meeting the effects of all of these interest rate hikes and continuing to reduce their security holdings. They want to see the impact of this on the economy before making any more changes. They said because this has been a long process over the last 2 years, they can now afford to not make any rash decisions and push the economy too far, which is why they wanted to take a pause. Many investors were expecting that this was going to be a hawkish pause, meaning that it's a pause, but hawkish in the sense that we may continue to see more rate hikes in the future, and that is exactly what happened. So the good news, if you're an investor, is it didn't really have too much of an impact on the markets, whether we're talking crypto or stock market, because this was exactly what investors were expecting. A hawkish pause, that is what happened. According to many policymakers right now, Jerome Powell says that nearly all policymakers view further rate hikes this year as appropriate, but they're going to have to analyze up-and-coming data before the July meeting. Now let's switch gears and talk about crypto storage. So over the last few months, you've seen what's happened in the crypto market, and making sure your crypto is secure is more important now than ever. And I've been using a new crypto wallet called the Hito wallet because of its small and compact design, and it's really secure. I can bring it anywhere. So a few key things I want to point out with the Hito wallet is that it's thin, wireless, it has a full color touchscreen, has tempered glass, and it's super easy to use. You don't need like a super long manual in order to learn how to use it. They've been working for a while, making major announcements. Ever since they launched pre-sale in July of 2020, they were placed 4th on Product Hunt. They were named a finalist for TechCrunch Startup Battlefield. They were named the number 6 cohort of the Berkeley Blockchain Accelerator, and they even started rolling out and shipping devices in December of 2022. So they've been making major moves and major partnerships, which is why I have started to use this wallet. It is something that I trust, I have continued to use, and you could bring it anywhere. So definitely worth checking out if you currently only have your crypto on exchanges. I would recommend taking it off, using this wallet. I'll throw a link in the description, but something that you need to be aware of, especially with everything that's gone on with crypto as of recently. So keep that in mind. And what we have seen is that specifically policymakers broke down to 3 separate categories. There are 2 members that indicate they don't see hikes this year. 4 of them see at least 1 more rate increase this year, and 9, or half of the committee, expect at least 2 rate hikes this year. There's some that expected a little bit more, but 9 of them expect at least 2 for the remainder of 2023. So what does this mean if you're an investor? Well, ultimately, the good news, like I said, is that much of what happened in this June 2023 meeting was expected. It was a complete change, a complete flip from the previous strategy where we had seen 10 consecutive meetings of rate hikes. But the good news is that it was expected, and the stock market didn't have any negative effects. Crypto didn't really see any negative effects, and we just continued to see basically asset prices stay the same. So that is good news. Moving forward, what you can expect as an investor is we need to be able to monitor up-and-coming data, and that is exactly what the Federal Reserve said. So in June 2023, we had a report for the May 2023 CPI data. This was just a few days before Jerome Powell and the Federal Reserve announced that we would see a pause in June for interest rate hikes. And in this CPI report, we saw the lowest number that we had seen in over 2 years. Inflation rose at a 4% annual rate in May, and this was a really good sign. Not only was CPI data really good, but PPI data was really good. We saw all across the board that inflation was coming down, and that was what helped prompt the Federal Reserve's decision to have a pause. So moving forward, what we need to see is that in the next report, which is going to be at the beginning of July, so in about a month, we're going to see new CPI data come out for the month of June. We're going to see new PPI data come out for the month of June. We're going to see a few other economic reports in terms of unemployment and jobless claims, and all of these things will directly impact what the Federal Reserve decides to do in the next meeting. So if you're an investor right now, I would keep an eye out on the CPI report coming out in July, the PPI report coming out in July, and just consistently what's going on with unemployment numbers week to week, because these are going to have impacts on what the Federal Reserve does. The good news here is that we look like we're in pretty good shape if we're investing in the stock market or in crypto, because many policymakers are expecting at least 2 more rate hikes this year. So if the economic data continues to get better, continues to improve, which I expect it will, there's not much to be worried about in terms of the next Federal Reserve meeting, because in the next Federal Reserve meeting, they're either going to raise rates like half of the policymakers are predicting, or they're going to have another pause. Either way, that's not going to be detrimental to the stock market. The only thing that would be detrimental and really have negative impacts is if they say, look, July's data came out and it was not good at all. We saw numbers increase. We were not expecting that. Inflation rose. That was not expected. So the only way that we could see negative impacts on the market in the short term is if we see July data, that July report for CPI, July report for PPI. When we see all that data come out showing what happened in June, if that comes in much higher than expected, we see inflation rise, that would be the only negative thing that could really be a negative catalyst for markets. Last few things I want to go over is just going to be up and coming dates you need to be aware of, because we talked about how there's an up and coming meeting in July for the Federal Reserve. The up and coming meeting takes place on July 25th and 26th. This is going to be where they talk about, are they going to continue to pause, or are they going to potentially reduce, reduce, or increase rates? Likely going to pause or increase, but that is going to happen on July 25th and July 26th. So keep an eye out on that. And finally, I want to go over moving forward beyond this July meeting. So after this July meeting into the end of 2023, end of 2024, more of a midterm to out long-term look, you can actually look at a new plot called the dot plot that the Federal Reserve published with their FOMC meeting. And in this report, it talks about where policymakers expect inflation, where they expect rates to be over the next 2 to 3 years. So remainder of 2023 into 2024 and into like 2025 and beyond. And the thing is that right now we are expecting that that interest rates are going to remain higher for longer, which they have said before, but it's become even it's been extended this time period a bit longer than people were originally anticipating, meaning that we're going to see higher interest rates for a longer period of time, meaning mortgage rates are going to continue to be much higher rates than we saw during the pandemic and right before the pandemic, and we're not going to see these rates come back down. It's going to be just something to keep in mind, a little bit stickier than people thought the federal funds rate would be. So keep an eye out on that, but right now things are looking pretty good if you're an investor. The biggest worry we have is if inflation suddenly spikes in the next report coming out in July. If not, things are right on track, continuing to look good for overall markets, but it is a big change from the previous 10 meetings where the Federal Reserve increased rates. Now they've officially paused.